With the largest youth population of any continent, Africa has the market and the potential to drive many trends that will positively impact our collective economic prosperity. One of the trends many have taken notice of here on the continent and outside is the rise of the fintech. After disrupting the traditional financial system, what comes next for Africa's financial technology players? And South Africa has banned scrap metal exports because of large-scale vandalization, which is harming the economy. But while the country tries to sort this issue out, the EU is saying this is a World Trade Organization issue. And on today's Crypto Watch, we get into the buzz around virtual free trade zones. What are they and how can African economies benefit? This is Business Edge. I'm Tolulope, Adeleru-Balogun. Let's start with the African business headlines. And let's get straight into headlines with Africa here. Now we start in South Africa, where consumers may feel some relief as a result of reduction in fuel prices that South Africa's Central Energy Fund says will take effect from Wednesday, September the 7th. The fund explained that both national and local issues played a part in the decrease. Now, following rises earlier in the year, this is the second month in a row that there have been lower prices. Now, due to the ongoing presence of aflatoxin in its groundnuts, the Gambia continues to face trade issues as its principal export value declines on the global market. Due to the restriction on Gambia's groundnuts in Europe, it is now being shipped to China, where it is being fed to animals and birds. This is a family of toxins produced by certain fungi that are found on agricultural crops such as maize, peanuts, and cottonseed. The South African Revenue Service, SARS, is investigating luxury goods purchased as part of a clampdown on individuals it suspects are deliberately hiding sources of income from the authorities. Chief Revenue Officer John Stone Makhubu says SARS will be paying closer attention to those buying luxury apparel and will look into how they make their money. The project is a step towards giving tax authorities a broader view of people that are not in their purview, but that SARS would like to bring into the tax net. And staying in the southern part of the continent, South African Airways is currently in talks with British Airways over the Comair franchise agreement it came into before the company was provincially liquidated in mid-June 2022. BA canceled the franchise agreement with Comair after this. Now, according to John Lamola, interim chairman and the CEO of South African Airways, the company is currently in talks about the possibility of British Airways taking over the franchise of Comair, which operated domestic flights in South Africa until it ceased operations in May 2020. And those are a few headlines for you. We're getting our first very conversation started this morning, and the look is on what's next for African fintechs after disruption. Stick around. The African fintech market is expanding rapidly, but the ecosystem's growth is still in its infancy stage. Fintechs have made giant strides across the continent, particularly in distribution, payments, and wallets. Now, between 2020 and 2021, the number of tech startups in Africa tripled to around 5,200 companies. And just under half of these are financial technology companies, which are making it their business to disrupt and augment traditional financial services. A Mckinsey report shows that African fintechs have already made significant inroads into the market, with estimated revenues of between $4 to $6 billion in 2020. A growing fintech industry has the potential to create jobs, skills, opportunities, and wealth across the continent. An IFC study estimates that over 230 million jobs in sub-Saharan Africa will require digital skills by 2030, creating opportunities in adjacent industries as well. But in the midst of all this promising future and potential, between the pandemic and political and economic challenges, What comes next for the African fintech industry? I have Mayowa Kuroyo, one of the authors of the Mckinsey report, joining me. She's partner, head of West Africa Financial Services at Mckinsey. Mayowa, welcome to Business Edge. Thank you so much for joining me.
Thank you very much for having me.
So I think what we have to start with is sort of the conversation around what makes our fintechs so attractive, because year on year, we've seen an increase in the amount of investment coming into the continent, particularly for this sector of the tech ecosystem. So between government regulations and the pandemic, and now a global challenging environment, as we've seen it in terms of the economy, African fintechs are still doing quite well. So why are they so attractive?
That's a very good question. I think one of the things I like to think about is what is the scale of the problem that fintechs are trying to solve? And when you think about the fact that Africa has more than 40% of adults excluded from sort of formal financial services, and the fact that it's a large population of over 1 billion people, and fintechs can be part of that solution. The scale of the opportunity for true value creation is actually pretty significant. Additionally, our report actually identifies some social benefits, which you mentioned actually, that fintechs can create over time. And I think that's another reason people find it quite attractive. And finally, fintech is actually probably one of the more advanced verticals for startups, with some entities already showing proven revenue models and, dare I say, profitability models over time as well. So some of these are some of the factors that contribute to the attractiveness of fintechs on the continent.
So what trends do you think we should expect to see, in particular, fueling the success of our fintechs? And I ask this also because what happened outside of, rather during and after the pandemic, was also a trend. And many reports have seen that as a factor leading to the acceleration of the increase of fintechs across the continent. So how is that working? How is the pandemic a trend? And then what are the other trends we might possibly be looking at for our fintechs?
Absolutely. Whenever I get asked this question about the pandemic, I always like to use a personal story. My 80-year-old grandmother, prior to COVID, we only communicated using voice calls or when I would go and see her or whatnot. And then during COVID, she learned how to use WhatsApp calls, especially WhatsApp video calls. So imagine my grandmother taking her mobile phone, and she's not even asking anybody to help her. She knows how to get onto her WhatsApp, and she knows how to get onto WhatsApp video, and she's now disturbing my life with WhatsApp video calls. And that sort of continued even post-COVID. So if you take a market such as Nigeria, you look at things such as the electronic payments revenues, that grew exponentially during COVID. And in other markets, sort of post-COVID, we've seen, digital payments revenue sort of revert back to pre-COVID, or just maybe 20 or 30% pre-COVID levels. In Nigeria, actually, what has happened is that we've continued to grow and to grow and to grow. So people have sort of formed the habit. People have learned the ease and convenience of using sort of electronic payments. And so because of all the digital, because of the fact that we had habits sort of change as a result of COVID, that's some of the things that we see fueling sort of the migration to digitization. We also talk about other reports, because you asked me a question about other trends that are sort of helping to accelerate the growth of fintech in Africa. I think one thing that I will say is that there's been a significant push for financial inclusion. Governments, regulators are taking actions to actually try and include more people into the financial ecosystem. We're also seeing increasing, we might talk about it a little bit later on, increasing availability of funding, right, for fintechs. I think in the last 5 years, according to our report, I think we saw that fintech funding grew over 18 times between 2016 and 2021, right? So there's a lot of money to drive innovation. Another thing I would talk about, my final point to talk about, is the fact that Africa has one of the youngest populations on the planet. So you have a young, fast-growing population that is the early adopters towards sort of digital types of products, and some of those are the reasons we see fintechs sort of growing exponentially on the continent.
Okay, so one thing that the report highlighted that I found interesting was that there were at least 11 key markets spread across the continent that you think are really going to drive the fintech movements for the continent. They include Cote d'Ivoire, Ghana, Egypt, Kenya, Morocco, Nigeria, Tanzania, and Uganda. But we also know that this sort of adoption and growth is not going to be uniform. There are going to be varying levels of digital maturity across these countries. So let's just take maybe three countries, for example. Let's leave Nigeria out. We know that there's a leader there. Let's leave Kenya out. We know that they're leading with mobile payments. Let's leave South Africa even out of it because of also being the most mature industry or economy on the continent. Let's look at Egypt, Tanzania. Let's even look at a Cote d'Ivoire. What do you think is really going to be driving attention and investment to the fintech ecosystem in these three countries, Egypt, Tanzania, Cote d'Ivoire?
Very interesting question. I think that each market has unique characteristics that, how would I put it, that sort of define them. And, you talk about Egypt, you talk about Cote d'Ivoire, and what was the third market? You said
Tanzania.
Morocco? Tanzania. Okay, Egypt, Tanzania, and Cote d'Ivoire. They're all very different. So Tanzania is one of the markets where we call sort of mobile money disrupted markets, where more than 100% of GDP goes through mobile money. Cote d'Ivoire is a market where between 50 and 6% of the GDP goes through mobile money. Egypt is a market that actually, very interestingly enough, resembles Nigeria, where you have the payment rails for instant payments already put into place. And we're seeing a lot of activity within the Egyptian ecosystem. Now, if you sort of, I think those are very interesting markets that you've actually picked. If you sort of think about the 7 or 8 unicorns that we have, so that when unicorns are $1 billion companies, Egypt has produced 1 or 2, right? So an example would be Bari, for example. In Francophone West Africa, you have Wave as well, which has come out as another $1 billion company. And they're doing completely different things. Bari, for example, is very much focused on merchant acquisition and enabling people to make bill payments, pay their taxes, sort of electronically, but offline. Whereas Wave is a market where, Wave and Cote d'Ivoire is a market where mobile money is beginning to emerge, and Wave is built on the promise of sort of mobile money type of financial services. So they're very, very different drivers that are going to move those markets. I think that what is important for players in the space is to understand the unique characteristics of the market they're playing in, is to understand what are, someone said to me, one of the quotes you see in the report is someone said in a market such as Africa, if you don't do anything on USSD, you're cutting out your addressable market by half. So you need to understand sort of what are the unique characteristics market by market and ensure that there's a product market fit and you are meeting people in the way they use financial services in their localities.
Yes, and I find that interesting because Kenya is the next place I actually want us to focus on right now, because Kenya has found its place basically in the mobile money markets, and that's because of course identifying the locality's needs and meeting those needs. So for Kenya right now, mobile money operators handled a third of Kenya's GDP in the first 6 months of the year, and that hit a record $32.1 billion. And around 90% of transactions on the continent, however, still involve cash. So we see that mobile money is going to be a big place. What's Kenya doing right that many of these other countries can look at in terms of increasing the mobile money penetration and, of course, giving room for more fintechs to grow?
The Kenya case study has been studied infinitely. A lot of people talk about M-Pesa and how it's completely transformed the face of payments in Kenya. But so a couple of things I would sort of point out that have led to the explosion of mobile money. This is by no means exhaustive. It's just a few things I would point out. I think the first one is the right use case to replace cash, right? Because somebody said to us that my competition is not other fintechs, my competition is cash. So how do you make sure that you have the right use case in, again, a way that people that can replace cash? I think the second thing that I would point to is the right regulatory environment to help drive the innovation that was required. And then thirdly, I think there was cooperation amongst all stakeholders. So you will see in a market like in Kenya, actually in particular, that there is cooperation between all the various different stakeholders in the financial ecosystem to drive both payments, lending, there's partnerships, and so on and so forth. I think that's a very good case study for partnerships between different types of stakeholders. And then finally, I think an important one is that they were very prepared for an offline world, right? They were prepared for a world where you have low data penetration, you have a not very rich populace who uses USSD for a significant amount of their mobile sort of transactions and so on and so forth. So these are some of the things we speak to in the report. And I think those combination of factors really help to drive the growth that we saw in M-Pesa.
All right, so moving on from there, there's one thing that also stood out to me in the report, and that's the issue that fintechs are having around sustainability of profits and the fact that they're struggling to monetize their customer base. And this comes about because they tend to offer significantly lower pricing or even outright free services, but when it's time to now switch to having customers monetize what they're getting from a lot of these fintechs, it becomes difficult. How much of an issue is that, and how do we see African fintechs getting around the sustainable profits and monetization aspect of their growth?
I think this is partly a chicken and an egg situation, right? Because you want to ensure that you have customers to use your service. You want to create that virtuous ecosystem and cycle around your whatever it is you're providing for your consumers. But the only thing I would say, or the comment I would make, is that growth does not have to come at all costs. Not all growth is good. And in the last few months, we've actually seen investors put an equal emphasis and an equal amount of focus on profitability in addition to growth. So startups must now begin to think about how they ensure that they are deriving value from the large installed capacity that they have with their customer base. How do you create customer stickiness? How do you cross-sell? How do you upsell? How do you basically make sure you're doing something with the customers that you have? Right, and you can't really blame startups. I don't think it's also good to blame startups, because prior to now, the metrics and the KPIs that they were sort of measured by was how fast are you growing, right? How many customers do you have? How many transactions are you doing? What is your total GMV, and so on and so forth. Now, I think which is another thing that is led to the name of the report, the end of the beginning, is that people are now beginning to say, look, more than just having customers on your base, I want to begin to see true value created. And now, startups must begin to think creatively about how they do so.
All right. So Mayowa, there's another interesting challenge that I noticed from the report, and that talks about the sector growing, basically. And the sector may not be getting enough attention. So some estimates say that about 50% of Africa's software developers are based in just 5 countries: South Africa, Nigeria, Morocco, Kenya, and Egypt. But this talent pool is not only in demand in Africa, but it's also in demand around the world. The World Bank estimates that there is a significant brain drain of information and communications technology professionals from low and middle income countries every year as they seek better employment opportunities and higher wages in countries where the digital sector is more developed. How do you think the industry is going to navigate around this? Because we can see this very clearly happening in Nigeria. Many people are looking at the fact that the kind of curriculum that is taught in Nigerian universities is not keeping up with the demand that the global economy has now. And we're seeing young minds, whether remote working or leaving, taking that sort of the next level for the economy to go and help somebody else's country. That's, of course, their right. They're getting paid better, and situations and places are much better. But it's going to be an effect that Africa will feel in the next 5 to 6 years, next decades even. How do we get around this?
It makes me sad when you say going to go and help somebody else's country, but that is the reality of the situation that we're in. And it's something that is not only endemic to fintech, it's actually something that we're seeing across the board. Managing, we term this as managing scarcity. And I think this is one of the biggest challenges we don't talk enough about. Talent retention, talent creation, talent development is a real issue in our markets across the board. And beyond the obvious answer around, dedicating time and resources to nurture and grow our homegrown talent. So you hear of academies to help with coding, you hear of internships and job placements for developers, and so on and so forth. I think that one of the things that we identified during the research phase is that pay parity is becoming increasingly important, because some of these skills are not only in demand in our geography, they're actually globally in demand. So if you have a Google, you have a Facebook, you have whomever coming to offer opportunities here, if you're young, fresh out of university graduate, or even maybe not even gone to university, you will take that opportunity because we're all aspirational and we all want better things for our lives, right? So I think pay parity is something that people have to begin to think about as the industry matures.
All right, Mayowa, my final question to you, sort of based also on the title of the report, which talks about the beginning of the end, and it's also the title of our conversation. What is next for African fintech? So we say we're in the infancy stage. We've noted a number of the challenges that comes with this stage as well, and that the continent needs to address. But we also see the unique economic realities and the customer needs that are spread out across the continent. Some 5,200 fintechs servicing those needs now. What do we do to move to the next stage of our fintech development?
Our report tells a story of possibilities. Financial services on the continent, I think, are at an inflection point, and several African countries have significant opportunity to capitalize on the momentum to unlock further potential for the sector or in the sector. I think some three opportunities I'll talk about. I think one is, how do you create impact at scale? We're still a continent that has 40% of our adults still not financially included. So how do we reach people who have not been included again? I think there is significant potential there. I think the second thing is also replacing and displacing cash. With all the noise that we hear about fintechs, estimates say between 80 and 90% of the transactions that we do on the continent is cash, right? It's cash based. So I think, again, innovative opportunities to dethrone cash is something that we expect to see. And I think thirdly, depending on the market, is that we will see more advanced financial services. So moving from just wallets, moving from just simple transactions, sort of what I would say more complicated financial services such as lending, credit, wealth management, and so on and so forth, I think presents another opportunity for the continent. And then finally, the last thing I'll say is, I think this industry has a significant potential to create value, and value not just in terms of pounds and dollars or naira and kobo or shilling, but also in terms of changing people's lives and really giving them access to a better life. So I think there is enormous potential that the fintech industry has for our continent.
All right, Mayowa, thank you so much. And that report is from Mckinsey and Co. You can check it out, looking at the African fintechs, the start of the end, or the beginning of the end, as it's titled. And we'll be watching to see how things played out. The end of the year is coming. We're going to see how much money has come in this year and whether or not that's been affected by other things happening around us. Mayowa, thank you so much.
Thank you. It was a pleasure.
All right. And the potential is there, as she said, not just for our economies, but also for individuals. 5,200 fintech startups on the continent, the number tripling just in the past year. The potential is obviously there. You're watching Business Edge, and the potential we have is not even a potential, it's a fact, because up next is International Business Headlines. Stick around. Russia's Gazprom has produced its first liquefied natural gas at a small-scale facility on the Baltic coast near the starting point of the shuttered Nord Stream pipeline to Germany. 2 production lines at Portavaya LNG have produced some 30,000 tons of the fuel. 1 tanker is already moored near the facility, while another is expected to arrive soon. The beleaguered British pound sterling received a much-needed boost, but the jury is out on how long this will last. The pound climbed as much as 0.7% to $1.16 on Tuesday after sliding to the lowest since March 2020. The rebound was fueled by reports that incoming Prime Minister Liz Truss has drafted plans to avert an energy crisis which risks worsening the UK's longest economic slump since the financial crisis. China sets a stronger than expected exchange rate fixing for a 10th straight day and said it will allow banks to hold less foreign currencies in reserve, its most substantial move yet to stabilize a weakening yuan. The People's Bank of China set the currency's reference rate at 6.9 0.096 per dollar, trailing behind the currency's move to a 2-year low. U.S. equity futures rose while stocks in Asia fluctuated on Tuesday amid a dip in the dollar as sentiments continue to be tested by central banks tightening monetary policy and Europe's energy crisis. An early advance in MSCI's Asia gauge fizzled as gains evaporated in Japan and Hong Kong while China gained. S&P 500 futures pushed higher but off the peak ahead of the resumption of Wall Street trading after a holiday. European contracts edged lower and treasuries dipped across the curve, taking the 10-year yields to 3.21%. Gold rose as the dollar eased and the outlook for inflation on the back of higher energy costs outweighed an expected European Central Bank rate hike. Its assets is stabilizing after capping 5 months of declines through August as the U.S. dollar and 10-year treasury yields climbed. This weighed on the non-interest-bearing precious metal. Gold is also finding support as a traditional hedge against price pressures. And those are the international business headlines at this time. When we come back, we head to South Africa, where the country is announcing a ban on scrap metal exports. There's a lot involved, and the European Union says, nope, wait just a minute. We'll tell you why.